Well, it's the long weekend. Markets aren't open tomorrow, but we are still trailing down, and we've lost. Start with Bitcoin, just in case you don't see it up here. We are trailing down. We've lost our anchor VWAP support from our current rise. I'm going to take that out, and we're continuing to press. Was looking for a good fail into this range to strike possible more likely short. But with this pressing down the VWAP, I'm not sure if we're going to be able to get there or not. We had a little tap here, uh, but nothing too significant. Um, Shorts are because of the structure, and we'll zoom out here a little bit. It's just the hourly to see what's going on locally, but if we go into the daily, I think that's where the real plays are here on the daily. If we look into structure, we're still bullish structure, so shorts are very dangerous. I mean, we've got quite the trend going on. You can see we're down in the bottom of the channel. So you could view that as temporary support. Maybe we come back up. Maybe we drop again from there, form a little double top. Or maybe it just catches support here and continues to go. The real area I'm interested in here is this 113. I have another fib on here. There we go. Distracting me. So that's the 113 at 113.9, about 114,000. So I'd be very interested in shorting a hit on that level. We may not get it, but if we do, if we say we bounce off the bottom of this, come up into the 113, that could be an excellent short down into the 50%. What we're looking to do is form a shark, and we have a validated shark on the daily. It's not perfect, but it is valid. Because we are between the, yeah, we're between the 886, which is way under here, right? So we had a little reaction there. That was also possible shark. But we can extend this D point all the way up to that 113 mark, which brings us up to about 113.9, 114,000. It also brings us within 100, 200, 300, a few $100 of the hop. So 113 sharks, those are worth taking even in counter trend to me, because the invalidation is so close that you're not putting a lot of capital at risk. Um, we got close here. I'm just curious to see if we come in. Now, if we start to break down into this value area high, then we're not likely coming back up to that 113 anytime soon. I would be looking at our 50% 50% drop for a Shark 5.0, because that is the current trend. We changed the parameters on this. The Do I have a 5 on here? I change these around so much sometimes. Let me just pop it in here. It'll make it something bright, colorful to see. There we go. All right. So that gives us our. I did it again. That gives us our target. I'm just going to tell you guys it's there. I have to move this thing again. There. No, I'm doing it wrong. I think I needed the point. That's the problem. There. Okay. Right. So that ranges depends on where we are. I mean, if we fall from here, it's down the bottom, near the bottom of that rectangle. Become a little higher, it goes a little closer to the top of that rectangle. But this is our range that we're looking to catch support in. It's coming into the anchor VWAP here from the low as well. It's just past the volume point of control. It'd be a little sketchy if we came all the way to the value area low. I wouldn't want to tag that again. I think falling through that into the value area low could mean we coming down into that 886 instead, which is all the way down here. I don't want to tap that far down into it. I'd rather hit this, make a 5-0, and then make another 100% extension up to what's also R1618 from high to low. Prior high to prior low is 1618 extension at 130,000, about 131,000. That would be ideal for me. And I think this is the better long to take, is to fall into this support. Um, it moves with the overall trend. The overall trend is up, and it has clearer invalidation, which for me would be the long would be breaking under the value area low. I wouldn't want to see a break under the value area low. So if we break under the value area low, it's not long. If we come down and find support, the 50% extension, um, even if it's just a quick tap and we come rise above, it still gives us some invalidation, allows us to run that play up 230,000. If we fail that, say we do come down, let's run some hypotheticals. What do I want to use? Here, use our path. Let's say we come down too far. We come down, hit that extent that 886 area. We could just be stuck range bound again for a while, um, or we could come down into our major support zone, which this is the zone. Right? This is the line in the sand for the bulls, and it remains here, right? Because breaking into this now means we have some higher term possibility of bear structure. We still don't have it yet because we don't have that lower high. We were able to make a higher high. So the bulls are defending quite well. I think any dip down into this range would be just a phenomenal buying opportunity. Um, but for trading and for in the next area to maybe some purchases, this is where I'd be looking for. We've had a good long run up. It is time to start looking for that trail off. And it may not be here yet, but we are getting some signs for it at least. So it's time to start looking for that trail off, that retracement before the next run up. It's just how we run the markets, level by level, piece by piece, bit by bit. We were fortunate enough to identify buying down in here, even some leveraged buys down in here, and we identified it was time to start deleveraging up in here. So not a bad play so far. Is Bitcoin ripping and roaring? No, but it is making some good volatility moves. We are able to actually make some trading money off of it. That's fantastic. So can't be too complaining there. Ethereum, again, talked about how this could be the area, this could be the token that it's time to break up, and it kind of did. I didn't get too far. We did hit the VWAP and this value area low. We could have been, well, we did anticipate this as being the next major hurdle. And on the weekly, we're even our HSI is even spiked up high, and the same thing with Bitcoin. If we close the week low below the top, it's going to start to drag this down. If we close next week below again, that signals an HSI top, and then we can look for that pressure for it to reset to curl back up and continue higher. Same thing with Ethereum. Looking for that pullback, possibly down here into $2,000 again, that prior area high, and retest that zone. If we get a pullback down into there, I think that'd be another good buying opportunity. It kind of creates this wave structure that we use to measure. Right, we'll come down, and then we'd come back up, possibly break it beyond the volume point of control, all the way up into the value area high. I'd love to see that full rotation back to the top of the range, then maybe another higher low, and then continue up to get to our main major target, huge macro target of about $7,300. Um, but we'll see. This again, I think, will be our next buying opportunity if we come down and get close to the bottom here. I'd say start looking for support here at this prior value area high. That would be fantastic. We get a nice good drop in there, and Bitcoin drops that 50%. I think this could definitely happen. It could even go a little lower. I wouldn't mind seeing it down here about 1,800 dollars even. That wouldn't spook me too bad. We've had quite a run. It's time to reclaim, find support, because we build support on these drops, right? Make a higher low, continue on. We go back into our general markets. Look at the ES. Um, Failing up here at the 886, or close enough to it, um, presents us with two scenarios. Scenario one is that this is the C point of a much more bearish structure to follow through with our prior bearish structure. This would take us significantly lower, though. Um, that would be a devastating move. While I am looking at a possible tap down here at on the ES anyway, down here at 4,350, you'd hate to see it break below that. That should hold, especially down here at 4,000, should hold as strong support. Coming down and breaking below that, that's a huge sign of weakness. It's quite a bear run, quite a bear market. But it will give us that bullish structure to use to return some of those losses at least and run probably back up to about probably look at about 5,200 at least. um it's early to call this, right? It was difficult enough to call down here 48.7, which we did tap, which was that anchor VWAP and our first major target here, 48,770, off of our bear target. We told you, look, we validated it here with this drop over the summer, and then for the rest of the year, we rose and we ground out under the hop, which was up here. And it wasn't until we got above the hop that we were safe. As long as we ground under the hop, we ran the risk of returning to these targets, and we did. Now it just could be a one target done scenario, but we don't know yet. Let me run into the daily here. We have a couple things going on. We have an ugly pattern. It's not great, but it is a pattern, and it's this. Um, it's a little disfigured. It's not bad. Just don't like this action in here. And that could run us down here into the anchor VWAP, right? And then return. That wouldn't be terrible. It'd recover a little bit. We have a lot of support in here. I think the anchor VWAP would hold up pretty well. I could definitely see this in a scenario, but what I'm really curious about is if we do catch support in here and rise up, we could invalidate um, our bearish structure. Let me change a little parameter on here. We're gonna do 382. Take out the 5. I'm gonna leave the 886 because here's the thing. The closer is better. So closer to 382, which is this, this is just testing the midpoint of this W pattern. It's also got the anchor VWAP. We come down here and we hit that 382, even all the way down to the 886. But I'd like to see the 382. And then what are we talking about? Now we're talking about a new pattern forming. It's much more exciting than this little thing. Well, let's build that out. Just going to get rid of this. All right, because we have an 886. We got our 382. Or close, And then we're looking at a 1618 extension. You can see that blows us way past our hop. And that would invalidate our bearish structure. significantly so. It doesn't mean we don't have there. So we're really looking at hitting possibly just under 7,000 on the ES on the futures. That would be fantastic. We would talk about a blow off top. That'd be where I'd want to hit it. The 1618 extension from the high, which I believe is right here at that candle. So that gets us, yeah, should get us right at 7,000, maybe just shy. We'd say we come just shy of 7,000 and we swipe out the hopeful traders. So this could be a much more exciting structure, and then we could take this off the table. Well, sort of. Here's our other problem. We run this up with the 1618 extension. Now we have a bullish shark forming, and that could still take us all the way down here. So that could be blow off top, major crash, and that major crash could come all the way down to the 113. Huge crash all the way down to 3,100, but it doesn't have to. We were also looking at 886 for that. That puts us down here at this support. So between 800 point difference, I guess it's not a huge difference, but it feels like it. It really, and it would be. It's the difference between losing this low, and I'd rather not lose that low, even though we had that bearish low here. Again, if we come up, just like Bitcoin, if we come up, maybe Bitcoin is leading all of this. If we come up just like Bitcoin, we fail to make that lower high. We made the higher high, and then we shoot down at that low. Um, you guys know my crash tracker. I can pull that up. Let's see. Yeah, and we've talked about the possibility of coming in, hitting it's close. Let's see what's down here. What's a 50% decline? Is just under 3,000, and yeah, we hit that 50% decline. That's our standard crash. So that would be a standard crash. And we have a rollout here at the top. It doesn't always mean it's too toppy. We have a rollout here on our other indicators. And this is on a monthly chart. So pretty strong indications. And we're in that zone. We're in that time frame zone where it could be happening. We have unemployment. If it continues to rise, tariffs could put pressure on that, and we have interest rates. Even the Fed has already put out its blueprints to begin to lower the interest rates. Market conditions start to look really dour, they could floor them, and if they floor those interest rates and unemployment begins to spike, as it did back here, as it did here, as it did here, we could get those 50% corrections as we got off of these crosses. Um, that's as far as I'd look. Honestly, I'd be very, very leery of trying to call anything here in these major Great Recession type reductions. I don't think we're in that type of straight. But a 50% decline would be a standard absolute crash. We could just come down here as we looked at those targets, right? About 45.3. We started to hit those targets that we got from our bearish pattern um, here, 43.50, 45. We could come down a little bit, 43, just a little over 25% decline, and then that would be a corrective, a standard corrective crash, and that'd be plenty. We wouldn't need to go much or any lower than that for that matter. So that could be good. The problem is, we fall out of this channel, And if we can't come back and reclaim the channel, then we probably are going lower. Again, like I don't want to be a pessimist or try to trample anything. I think it's still really early to call this up here. It's ridiculous. I mean, I wouldn't bet my money on that. I'm not. I mean, money is in the market. I'm not betting my money on the crash just yet. I still think there are plenty of possible buying opportunities. We just have to sniff them out. But we are in that time of turbulence where things are getting a little dodgy. And until we break over this hop, as I've said before, until we break over this hop, I can't get super bullish. Uh, but that said, I can't keep an eye on where I want to start getting interested in the market again. That's going to be down here at 55, 5,553. I think that's where I'll start to really look and hey, let's start buying some more stuff. And then we come down here to the 886, might think about buying more stuff again. And then again, if we come down here, buying more stuff again. So it's just layering in your buys and then getting those market returns. Of course, it's going to depend on structure and on what to buy. You don't just buy anything. I'm going to say, let's just go out and buy FET because I want to buy FET. Um, you really got to go into the charts and look at your positions and think about like what we call buying Boeing down here on these lows, particularly at this 786. It was a good buy, but that's because it had the structure. American Airlines, we bought down here at the bottom because that's the bottom of our support, and validation was very clear. And we got a little balance out. Now we're testing the top of this range channel. If you wanted to buy here and hope to keep it out of this lower end, possibly, but I think it, you know, probably looking at this for support. Um, Verizon, I got nothing. Like I can't give you this structure doesn't show me anything. It gives me a good buy or a good trade anymore. Its time to get into was down here, and that time is over now. The second time was to test this range here, and that time is also over. So again, it's always going to be asset dependent on what you want to hop into, where, why, and how. Right. So keep an eye on structure, keep an eye on market change, keep an eye on rounding bottoms, and then mark your targets so that when you hit them, you can take your profits out. And just like we did with 3M, and I've still got a good amount of 3M because I believe that the worst is over for them news wise. Hopefully they can recover. The U.S. markets can recover. 3M will recover as well. We may form that structure to get out, and that gives us new wave structure. And that new wave structure, say like a 127, right? That new wave structure. Oh, actually, that's more of an 886. So we would, it's actually closer to a butterfly. So yeah, maybe the 127. Yeah. And then you've got more plays you can make off structure. Um, but that's the difference between trading, and investing right there. You only take your best bets on the assets that you like to trade. You don't have to trade everything and anything just because somebody else is trading it. If you look at a chart and it doesn't make sense to you, by all means, don't hop in it. You want a clear path for what you're used to looking at and what you're used to trading. And you only have to take the winners. If you don't see any winners today or tomorrow, then don't make any trades today or tomorrow. Wait until those present themselves to you. And when they do, um, then you've got your plan and stick to your plan and execute your trades. Anyway, that's enough mumbling and bloviating from me. So I'm going to close this up and I will see you guys later. Bye.